Well, good day there, Wealth Press subscribers, viewers, traders, and investors. It's time for a midweek update on this very special election week, and I'm joined by Jeff Yasteen today. Jeff, how are you?
I'm doing well, doing good.
Fantastic, Jeff. So the market has definitely adopted a very bullish phase today, and it's not clear to me whether that's because the market is pricing in a Trump market, contrary to what's being reported or rather a Trump victory, contrary to what's trending in the reports of media, or is it pricing in a Biden victory consistent with what's being reported in the media? What's your take on this?
I think this is one of those situations where I hate to sound like a Zen trader or some sort of Sherpa, but it's almost like you have to step back and kind of let it wash over you and just enjoy it for a moment. And at the same time, understand that there are moments in the market where it defies easy explanation. By that, I don't mean to sound like I'm a disbeliever in this rally, but you just have to understand that sometimes we don't really know for sure. Now, there are some who believe that the rally we've seen, both Monday and Tuesday, and obviously since the election, is let's say a celebration or relief rally, in that we will see a Biden presidency. Not everybody's celebrating that, but you're going to see a Biden, basically a split U.S. government, and you're not going to have Democrats controlling both houses of Congress as well as the White House. I think a lot of people were, maybe it's overstating to say dreading that, but I just feel like you had that. And then secondly, a lot of people went in last week, and I've been saying this in my online postings and all that, a lot of people finished up last week very bearish, very negative. The put call ratio was high on the put end of things. And so we go into Monday morning and suddenly everybody's like short or basically out of the market. And now it's like, oh, well, it wasn't the end of the world. We didn't have, militias taking over everything and all the other things that we've dread. Most of what we've seen has been relatively organized and not too extended, not somehow out of the ordinary compared to 2000 even. And so I think there's also this big relief rally going on, and a lot of institutions that are basically out of step with the market, and they're trying to get back into step because a lot of them missed a big chunk of the rally from March through August and September as well. So they're all playing catch up, and that's what happens when you see days like the last handful of days with these double-digit gains, percentage gains, in all the major indexes.
Right. Well, that's interesting. So the chaos did not materialize in the United States that was feared and projected by some media outlets.
Yeah, I mean, the president came out. I'm sorry, the days are starting to blur into one here. The president came out. I think it was it Tuesday night or early in the morning on Wednesday morning, and was basically saying that they should stop counting right now. I believe I've won. He's put out tweets saying he's I don't know what it means, but laying claim to the vote count in Pennsylvania, such as it was, and basically saying I should be president based on all this. And no matter your view of the political aspects of all this, you just have to say the country and the powers that be on the election side of things have essentially ignored all that. I mean, it's just they're going to launch their lawsuits, walk through this process, and again, we're not really in unknown territory. A lot of these kinds of challenges we saw in 2000, the country got through that, and we'll get through this as well. Basically some kind of orderly transition of power, presuming there's a transition of power. And again, if it isn't, then we'll just see more lawsuits. Either way, I think people are adjusting to it.
Sure. As of this moment, there is no more clarity towards an absolute victory than there was at the end of the day on Tuesday. Is that accurate?
I suppose it depends on which side of the fence you're on. I mean, Biden came out and said he didn't give a victory speech, but he basically said, "I'm confident that we will wind up with the requisite number of electoral votes." Obviously, the president and his people feel differently. I don't know that it even matters at this point. I think the market is just moving higher in part on this relief that it's over with, and they can sort of see through to the end. And again, add that to so many being out of position and not fully invested the way they should have been, and you get these big spikes.
Right. I find it interesting that the reporting of CNN versus the Wall Street Journal in terms of the electoral counting is so all over the map. I mean, at one point, CNN had Biden and Trump in a dead heat, and have since revised their counts downwards in both cases. Whereas the Wall Street Journal has sort of consistently sort of projected a Biden victory. In fact, right now on the Wall Street Journal website, we've got it indicates Biden with 264, just six votes away from 270, and Trump still at 214. And yet I find that very, lopsided given the uncertainty surrounding those key battleground states like Pennsylvania and Nevada and Wisconsin that are, the jury's still out. And
Sure.
the race is so close that there's really no reason to believe that one is any further along than the other, unless you believe the interpretations of certain media personalities who say, well, the mail-in votes that are left to be counted in most of these jurisdictions are going to favor Democrats. That's the sole reason that I could see to be weighted in that favor. But that does not necessarily mean that that is the case.
No, certainly not. And I think the Trump team, the campaign, is in the lawsuits and other things that they're preparing, and in some cases have lodged already, kind of is going after that. But the key on this, and I'm no expert on these things, but the key is that in some of these states, they're counting what are largely mail-in ballots last. And these are ballots that were, because Democrats in this country tend to do more vote by mail than Republicans do. I think there's a presumption that based on the data that everybody has, both Republican and Democratic, that if it's like other counts, that as they continue to open more of these envelopes, the numbers, whether it's 3-1 or 4-1 or 5-1, that they've seen in prior samples will continue to be in a similar sort of statistical proportion. So I think that in a general sense, that's where those calls are coming from. But like you say, we've been through this before, and you just don't know until they sit down and start looking at these things. And it's a kind of a drawn out process. I had to remind myself that in 2000, that process here in Florida, ultimately decided by the U.S. Supreme Court, didn't wind up until December, until we had full clarity on it. And I'm sure that will likely be the case here as well.
Well, and the market has demonstrated in no uncertain terms that it doesn't care whether there's a presidential victory clear or not. It's just happy that there's not going to be a uniform distribution of power across the Senate and the House.
And Jim, the other thing I'll throw in here is that I'm of a firm conviction here that I think the other aspect of this, the buoyancy of the market, if you will, is also predicated on a sense that the vaccine makers like AstraZeneca and Moderna, and I'm sorry, there's a third one that escapes me at the moment, that like Moderna came out about a week ago and basically said, we are actively prepping for the rollout of our vaccine. Now, they haven't even announced their phase 3 clinical trial results, but that is supposed to come out here sometime in November, last I heard. So I have to wonder and speculate whether the market is also buoyant, because you can imagine at some point if one or all of these drug companies come out and say, we have good results and the FDA has given us the go-ahead, that really changes the whole viewpoint on COVID-19. And suddenly now the market may be sensing, that we're, I won't say at the end, but that we're at the beginning of the end. And if that's the case, obviously there may be more reason for optimism, however short or long-lived it may be, but a case for optimism. And we're seeing that reflected in this ultra buoyant market, such as it is right now.
You bet. So among the reasons for the relief the market is expressing is this idea that without a clear legislative control, there's little risk of changes in regulations pertaining to everything from resource extraction to the war with China. And so I guess that means that the future is more predictable than it would be absent that, absent a distribution of power across the legislative levels as there is. So then what does that tell us about where the opportunities are going into the weeks ahead, assuming that there is not going to be any concern whether who's president or not? Let's just talk about what are the opportunities in the market going forward.
I'll give you my personal view, and I think we see some of it also, maybe a different version of it slightly in the stock market the last few days. What we've seen since the election is this thing where they're back to what traders call risk on. So you're buying speculative assets, you're buying your tech stocks, which seem to have a great opportunity, but may not have much in the way of profits, that sort of thing. And so we're seeing this sort of pell-mell rush back into a lot of those names. My own view, though, is that I think what we will see here is that we will see a broadening out of the market. I think we have to have that. We have to have these other sectors start to carry more of their own weight in order for these broad indexes like the S&P to actually move out to new all-time highs. And I think if we see things like energy come around a little bit more and the financials come around a little bit more, we're seeing glimmers of it, but I think that we're going to see traders go back into a lot of these names, and we're going to see more of a steady, let's say, accumulation phase. And I don't expect that we're going to break out the new all-time highs in the next week. I think we'll start seeing some profit taking activity over the next handful of days. But I can see, once we get beyond like Thanksgiving and we get into that sort of Santa Claus rally mode, seeing through the end of the year, I think that's when we'll start seeing more of this broadening out activity. I really do think that we're going to start seeing that.
Sure. Do you think that the anticipated stimulus package that arguably should be still in the works regardless of who becomes the leader of the country based on the increasing numbers of infections due to coronavirus, do you think that is going to have to wait until the new government actually takes over operations in January? Or do you think Trump is going to actually push through a stimulus package as some sort of way to say, well, you should have voted for me because here's the biggest stimulus package you could imagine? And, obviously he's more of a vindictive personality than traditional exiting presidents, should that be the case. And so he might sort of have this viewpoint that, well, I'm going to make a shambles of the deficit by launching this massive "I told you so" stimulus package, where everybody's going to say, "Oh, geez, we should have kept him because there's no way Biden's going to approve, call it $6 trillion in stimulus for every man, woman, and child."
I think it could go one of two ways. It could go the way you described. If he doesn't get the count and the cooperation from the courts that he and his team are hoping for with this the contested elements of the election, I suppose there could be a more vindictive nature, and where he just says, "Well, I'm not signing anything." But the McConnell in the Senate has already indicated. I think he said 1.5 trillion was the number that he now thinks he has the votes to do. And I think the key thing here is now that they're past the election, basically the pressure is off for a lot of these senators and congressmen from more conservative districts, where it's, you go back and you're facing your constituents, and it's like, why are you, blowing out our deficit to help, those people, whoever those people are supposed to be. It just puts them in a tougher situation, if that's not what you want to face up to. So I think that there's a lot of that, where it's like the election's done. So now, even if it takes 2 Band-Aids instead of 1 big Band-Aid, they have a clear path to being able to do that. So I'm glad you brought up the stimulus thing, because obviously I think that plays into all of this as well. The other key thing, Jim, and I suppose this is sort of the danger here, is that we see the market moving higher, and I think we're either close to, or it might even be at new all-time highs. I don't have my charts exactly right in front of me here, but the one danger might be that if we move sharply higher from here, say in the next week or two, you can make an argument that maybe the market is sort of front loading a lot of the expected economic impact of the stimulus already. And like, how many more Zoom calls do people really need to do? How many people are going to go out there and buy more Teslas? And these other stocks that are moving at all-time highs already. So, that would be the one danger, is that maybe we, rally into year end, but it becomes, a truly unsustainable situation, and we have to seek some sort of lower value in the market. But for now, I'm content to sort of see the market move powerfully, but hopefully sideways. And if we see this more broadening out effect that I'm aiming to see, I think things look better from there.
You bet. Jeff, thank you very much for your time today. We're going to leave it there for now, and I'll come back to you in the roundtable next week. Thanks so much for your time today.
Thanks, Jim. It was great.